Welcome to our comprehensive guide on calculating your housing budget. Buying a home is an enormous financial decision, and understanding exactly how much you can afford is crucial. In this video, we will guide you step by step, factoring in your income, debt, investments, and expenses. Let's take a moment to review our agenda. First, we'll assess your financial situation. Next, we'll determine your monthly expenses. Then, we'll calculate your debt-to-income ratio. We will move on to estimating housing costs using a mortgage calculator and factoring in emergency funds. We will also consider future expenses and finally, seek professional advice. The first step to calculating your housing budget is assessing your financial situation. Start by listing all income sources like your salary, rental income, and investments. In this case, you have a $270,000 salary and an anticipated $2,500 monthly rental income. Next, identify your assets, which include savings, investments, and retirement funds. You have $480,000 in investments and $70,000 in emergency funds. Finally, calculate your debts, such as mortgages, loans, and credit cards. You have a mortgage of $220,000. The next step is to determine your monthly expenses. Categorize your expenses into fixed, such as mortgage, insurance, and subscriptions, and variable, such as groceries, entertainment, and utilities. Use online tools or budgeting apps to track your spending automatically. Although manually tracking expenses in Excel is more tedious, it provides detailed control over your budget. Now it's time for a quiz. What is the benefit of using a budgeting app? A. Ease of tracking expenses. B. Manual control over every penny. C. Detailed but tedious tracking in Excel. D. Increased expenses awareness. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is A. Ease of tracking expenses. Budgeting apps automate the tracking process, making it easier to manage your expenses with less effort. Moving on, you'll need to calculate your debt-to-income ratio, or DTI. Start by calculating your total monthly debt payments. Next, divide this figure by your gross monthly income. Remember, a lower DTI improves your chances of securing a favorable loan. Let's take a look at this flowchart that visualizes the debt-to-income ratio calculation process. It starts with summing your total monthly debt payments. You then calculate your gross monthly income. Next, you perform the division of total debt by gross income to get your DTI. Finally, you determine whether the ratio is favorable or needs improvement. Next, let's move on to estimating your housing costs. You'll need to consider not only the mortgage payment, but also property taxes, homeowners insurance, and potential HOA fees and maintenance costs. Add these to your other monthly expenses to see how your total expenditure would change. Now you can use a mortgage calculator, a valuable tool that allows you to determine affordable home prices by inputting your income, debt, and down payment. These calculators estimate the maximum mortgage amount you qualify for based on lending guidelines. It's always best to consult with multiple lenders, as qualification can vary by institution. Now let's talk about emergency funds. It's crucial to maintain a robust emergency fund to cover unexpected expenses, typically 3 to 6 months worth of living costs. Subtract the amount set aside for emergencies from your available funds to determine what can be spent on a house. Consider future expenses that may arise, like increases in interest rates, property taxes, or living expenses. Buying a home significantly increases your liabilities, and accounting for these potential changes is vital in your long-term financial plan. Finally, seeking professional advice is always a good idea. Consult a financial advisor for personalized guidance on budgeting and long-term financial planning. A mortgage broker can assist with information on loan products and qualification for a mortgage. In conclusion, buying a home is a major investment. Thorough financial planning, diligent budgeting, and informed decision-making are key to securing a property that aligns with your financial capabilities and long-term objectives. Thank you for being a part of today's session. We hope you found it insightful. Don't forget to like, share, and subscribe for more great content. We'd love to hear your thoughts in the comments below.